Likes to get me in the mode. All right, so we're live on YouTube too. Cool beans. So, morning, Mel. Chapter 14 of The Science of Getting Rich is entitled The Impression of Increase. And it opens with, I like to read from this to open all my talks. Whether you change your vocation or not, your actions for the present must be those pertaining to the business in which you are now engaged. You can get into the business you want by making constructive use of the business you're already established in, by doing your daily work in a certain way. And as far as your business consists in dealing with other men or women, whether personally or by letter, the key thought of all your efforts must be to convey to their minds the impression of increase. Increase is what all men and all women are seeking. It is the urge of formless intelligence within them seeking fuller expression. If you want to, reach more people, you have to, let me get my mouse here. It's through the impression of increase. If you look at this chart here, if you go to my bio link, let's pull this back a little. If you go to my bio link and click, you have to scroll down. I think it's a little bit of ways, but this, if you ever buy my book, the book that we're going to talk about here, if you ever buy it, I usually send you a printout of these, and it's entitled The 10 Pillars of Success. And, I didn't make these up, obviously. I clipped them along the way. And it's just a basic idea, right? And much like most religions can usually be summed up pretty simple. There's a whole lot of stuff in the middle, but ultimately they can be summed up. I mean, if you grew up as a Christian as I did as a kid, there's a time in there's a part where Jesus is stopped and the guy says, "Hey man, can you sum all this up for me?" And he goes, "Yeah, love God and love your neighbor." That's it. Everything else, if you do those two, gets taken care of. Well, in the 10 pillars of success, pillar number 1, how you think is everything, and take full responsibility. And everything in between that kind of sums up those two. And so if we come into the world of trading or investing, how you think about trading and investing is super important. And the first thing you're going to have to do is become consciously aware, are you trading or are you investing? You can't do both. You can't be an investor and trading at the same time. Now, you can own investments over here and you can trade over here, but you can't trade and invest in the same thing at the same time. It's not possible. You can't be in two spots at one time. So you can't be in two mindsets at one time. You can't buy and hold a rental property to collect rent and at the same time flip that rental property. It doesn't work that way. So you have to decide, Now, there could be a time that an investment becomes a flip, and there could be a time, there could be times, but it can't be wishy-washy. Meaning when you go into it, you decide, hey, I'm going to trade, or hey, I'm going to invest. And sometimes people that are investors all of a sudden become traders. And what you want to do is make a clear distinction. Now, the way that I've done this is through different accounts. So I like to have my trading account separated from my buy and hold long-term investment account. Because this is a daily chart. So I'm using stockcharts.com. Each one of these bars represents one day in the market. One day. And if you notice, the market tends to climb a wall of worry, they say. It just tends to go up, 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 and then aggressively falls real fast. So you saw here in 2 days, the S&P and the NASDAQ fell, almost 10%? And they did it, what was a month of trading. Like if you go to the price, it was all the way back over here. It took 1 month to go from here to here. It dropped it in 2 days. It climbs a wall of worry and it takes an elevator down. That's how the market works. It goes fast. But if we back up, in the very opening of the book, my book on trading, the Money Flow Trading System, which is not a book on investing, it's a book on trading. In the very beginning, I say, listen, I completely believe in buy and hold. Like you can just buy quality stocks and just hold them. And that works. It makes money. They grow. They pay you dividends. It's a no-brainer thing, okay? That's not buying Tesla and flipping it. Two different games. And you could buy Tesla and hold it, and obviously that's work. But that's not moving in and out of Tesla. That's not trading. And so trading is a sport. It's an active sport. It's like a game. It's like combat. Like you're going against the smartest people in the world with algorithmic trading. There's people who've invested billions of dollars in their infrastructure, and they've hired people with master's degrees and quantum physics degrees and math degrees to sit in rooms and stare at computers and try to take your money. That's what they're trying to do. It's a combat sport. They're trying to take your money. And so if you come at trading half-ass, sort of doing it, here's what'll happen. You'll give all your money to people who aren't doing that. You're going to give all your money to people who get up an hour before the market opens just to prep, just to see where the market's going to open. Where's gold? Where's oil? Where's the S&P 500, right? And so they're approaching it. And so part of when I talk about the 10 pillars of success that come when you get the book, I mean, I put them in there. Why? Because I'm trying to explain to you that like these should be written down. You should look at these. Pillar number 7, focus on the big picture. So that's what we're going to talk about here. Big picture is price movement. How does price move, right? How you think is everything. Are we trading or are we investing? That would change how we're going to handle this situation. As a trader, I don't want to be on margin going into a market correction. As an investor, a market correction is just an opportunity to buy more stocks. Two different game plans, two different mindsets. You know, are you at a mature level enough that you can separate the two and do both at the same time? Can you come off margin in your trading account while preparing to raise cash to take advantage to add to maybe your buy and hold? Two different games there. It's different to buy a house to flip a house than it is to buy a house to rent that house. It's a different game, okay? And so as we come in, pillar number 7, focus on the big picture. Don't let the little details, you don't have to get it right, just get it going, right? So if we're looking at the big picture on the S&P 500, this is a decade of price here. This is one decade. So if we're looking at a decade of price, I mean, what's it done? It's basically straight up since 2011. I mean, it goes back even further than that, right? And so as we look, we see price just going up, man. Going straight up. So we're playing a game, one of the basic tenets of the money flow trading system. We opened, here's, you know, the cover of the new book I'm working on, The Alpha Code, Unlocking the Stock Market Price Movement. The basic concept of this is this idea that 70% of the time stocks go up. And so we're able to then come into this and say, okay, we're going to play a game where statistical odds are price is going up, right? Now, as we begin to buy individual stocks, that can change. You could pick bad stocks. Like that's easy to do, right? And so we have to make sure that all these pieces of this puzzle come together. But this is big picture. Big picture is you're playing a game where price goes from the bottom left to the top right. And as traders, we're not buying and holding. That's not trading. Trading is what? When this happens, that's 3-4 months of a down move. You know, how do we deal with these? We need a way to spot these to get in, right? To try to get in down here, to ride it up here, right? To get in down here, ride it up here, take some off. Like to be able to maneuver. As a trader, we need to be able to move in, move out. Trading isn't about holding the stock as long as possible. That's not trading, that's investing. Two different things, right? And so, let's pull this back. So, the premise of the money flow trading strategy is you're playing a game that 70% of the time goes up. And so if you're brand new to trading, there's no need to spend any time trying to figure out the 29% of the time. And so a lot of people I'll talk to go, what about shorting? Okay, that's fine, but you're trying to play a game that only worked during these times right here. So we want to ignore all the obvious fucking easy up to somehow try to capitalize on a couple little down moves that happen from time to time. This is all ego. Now, as you become an advanced trader, as you get going, as you're doing better and you become more, we want to capitalize on these down moves, but spending any time when you don't know how to make money on the up move or how to pick stocks or how to move in and out or how to set targets or how to limit the downside or how to hedge yourself or how to, you know, how to find a stock that's undervalued that has a catalyst to move and set a logical target, there's no point in wasting time worrying about these down moves. Like, it's skills. So we want to build like an onion, one layer upon another, right? So we start with the big concept that price moves up over time. Price moves up over time. So as we drop down from a monthly to a weekly, let's go to a weekly of the S&P 500. Looks a little different, right? Looks a little different. Look at this weekly chart. Looks a little different. Now, all indicators are, a lot of people put a lot of value on indicators aren't any, I mean, all they are is price. All indicator is a mathematical formula based on price. So if you understand price and how price moves, you'll understand indicators will make sense, but they're not as valuable as people think they are. I mean, they're useful. Really, all an indicator does is for fine tuning. Like, you really don't even need one. If you understand the 4 stages of how price moves, you don't even need indicators. You don't even need moving averages, right? The only reason people think they need them is because they don't know what they're doing. Once you know what you're doing and understand how price moves, you realize that indicators and moving averages and all of that stuff is just fine tuning. Okay, you don't need a scope to go deer hunting. You can just shoot. You can just learn the basics of how to shoot a rifle and kill it. But if we want to fine tune it, right, what do? We put a scope on it. And that's all indicators are doing. They help you put a scope on it. I mean, you didn't need the RSI to tell you this was a big ass sell-off during COVID and that prices got too low. You didn't need an indicator to tell you that. You could see it. You could see that price ordinarily, based on the big picture, over time doesn't drop that far. And when it does, it's oversold. So you didn't need this indicator here to tell you that. It was pretty obvious, right? And so if you follow the 4 stages of price movement, that was a big ass down move, right? So just keep that in mind. What the king is price, and price is what pays. That's what they give. The money in your account's based on the price, not an indicator. And so we want to use the indicators to fine tune the big picture. And that's what we do. And, you know, in case I don't, if you go to my newsletter, of course, it's in the book, I cover all of the indicators I use. But if you go into the newsletter on page 9, you'll see the indicators I'm using. But a lot of it is how to use these. But it's based around this pattern you're going to see right here. This is it, man. If you can't see this pattern in price movement, you know, I don't, you know, you're not trading the way I trade. Even in investing, I'm watching this pattern here. Why? Because this pattern tells me where price is most likely to go next. Where it's most likely to go next. And so if I look at a stock and I go, okay, am I in a stage 1? Am I in a stage 2 uptrend? Or am I in a stage 3? Or am I in a stage 4 downtrend? Or am I, you know, so that'll help me decide what should I do. And so if I'm a trader and I'm trying to trade to the upside, do I want to buy a stock that's going down? Maybe, but it needs to go into a stage 1, right? And so if the basics of the strategy is based around this, it solves a lot of problems for me. And it also helps me interpret how I'm going to trade. So let's look at a stock like Exxon. Exxon's in a stage 4 decline, going straight down. Look at all the indicators pointing, the 20, the 10, the 5. Do I need the 20, the 10, the 5 pointing straight down to tell me price is going down? No. But it does help me confirm there's no reason to even get excited. They're pointing straight down. Everything is pointing straight down, right? It's building up momentum to the downside. And so if I see that, that saves me from buying here, 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 here. I don't need to buy. It hasn't gone into a stage 1. And so as I watch this pattern, what am I waiting for? Okay, if I know it's in a stage 4, I'm watching. And I'm watching, and I'm watching. Now I need to know, well, how do I know it's a stage 1? How do I interpret that? And that's where price plus these indicators will come in and help me understand that. So if you look at this, this is Exxon selling off, right? And you could say, well, they're undervalued. Okay, you could be right. That doesn't mean they're going to stop dropping, right? Just because something's undervalued doesn't mean it's going to stop dropping. It could keep dropping and dropping and dropping. Nobody knows. Nobody knows where price is going. There's no people. Nobody knows where the bottom of Exxon is or where the top is. But we can find patterns that every time it bottoms, it looks like this. Every time it breaks out, it looks like this. So let's take a recent ESPR is a recent stage 4 decline. Remember, big down move that now started to move up. So this pattern that I'm looking for, this is what I'm going to look for on Exxon. I'm going to wait until this pattern emerges. Now I'm jumping ahead, but we call this right here a stage 2 breakout. And so the pattern, sideways, down, sideways, up, looks just like that, doesn't it? Sideways, down, sideways, and now we're breaking out right here. So that is now the beginning of a stage 2 breakout. And so as you look at these charts, price, not the indicator, is doing it. I could take all these indicators off. I can see the stages. I can see them. I mean, you don't see it? Look, it literally stopped going. And so what'll help you is you begin to draw. We talk about this in the book, support and resistance. There's resistance. Resistance is a ceiling. Price hits it, can't go anywhere. And then it just starts going down. And then what happens? Eventually you get to a bottom and it stops and there's a bottom or a floor, support, right? And then it starts going the other way. Price moves up and down. It can only do 3 things, up, down, or sideways, okay? And so within the context of up, down, or sideways, you're going to see these patterns emerge where price will just start going up and up and up and up, and then it'll stop. It'll hit a ceiling, and then it'll start going sideways, and then it'll break, and then it'll start going down, and it'll just keep going down and down and down, and then it'll stop, and then it'll start to go sideways. So if I see this pattern emerge, of repetitive pattern of price doing the same thing over and over, as a trader, now I could take concepts like, oh wait, price targets. I could research that. How do you set a price target? What does that mean? Right? And how do I scale out of a trade? So I could enter a trade with a plan, with the pre-written plan. Like I already know I'm selling some at 40, I'm selling some at 46, and I'm selling some at 52. When it gets there, I don't need to think about it. I already made the plan. It's called a trading plan. Like this is how you trade. If you want to flip a house, you need to know what the hell to sell the house for. If you just buy it and say, well, I hope we'll see, you're not going to be a very good house flipper. You're not going to be in business very long, right? So trading is the same thing. This is not investing. And so if you come to this with an investor's mindset, you're not going to be a good trader. This is trading. And this is why I like to separate the accounts, because people will get it confused and they'll go to an Exxon chart and they'll say, well, this is a good investment. It is. I'm not arguing that, but it's not a good trade. You don't buy something to go up when it's going down. That's the opposite of good trading. If the price is dropping, you don't buy it. That's not trading. That's just investing into a falling stock, right? So if let's look at Walgreens. That one's been falling. Is this a good trade? It's going the wrong way, unless you were shorting it. But I'm not going to short into a bull market. Why? Because 70% of the time stocks go up. In this instant, they're not. So what does this tell me, though? I need to be ready. So what if I could find a pattern that when they sold off, and then a pattern where I knew when it was probably the bottom, because all the bottoms look the same, all the stage 2 breakouts look the same, all the tops look the same. Not 100% perfect, but every top looks the same and every bottom looks the same. But it could have more than one bottom, right? That's possible. But the bottom still looks the same. And so as I began to watch this pattern of price movement, here's what I began to notice. Whenever price was on a stage 3, let's zoom this in. Let's take this up and zoom this in. Whenever price was on a stage 3, these other indicators, RSI, would help me out. They would help me fine tune it. And so I could combine resistance. All of a sudden I'm able to draw resistance and price bounces, hits it, bounce it, hits it, and the RSI went extreme. What did that do? That helped me fine tune it. It helps me fine tune what I'm seeing happen in front of me. I'm seeing the stage 3 happen. And then if you notice on the chart, it says best time to sell, best time to buy. That doesn't necessarily mean you have to buy or sell. What it's telling you is this is like a yellow light. Probably means you're going to have a red light, right? That's all that means. And it means boom. So when that happens, it's the opposite of the breakout. So if we're looking at ESPR, back to what we were looking at on ESPR, the breakout was what? Price ripping higher, closing above the green line. So look at this pattern. So first thing I observe is the pattern. There's the top. Best time to sell. So if we're looking at the pattern, best time to sell. There's the top, best time to sell. Now what happens? Well, I assume it's going to go down until what? Till it stops. Till it stops, which was right here. Price had officially stopped going down. See the bottom? He puts in a bottom, comes back into the box. There we go. There's the bottom. Where's the breakout? If we look at the chart, price closes above the 20-day, just like over here, it closed below the 20-day, breakout above, breakout below. Pretty simple, right? And so I see this price breaking out. Now what? I assume what? It's going to keep going up. Till when? I don't know. I have no idea. But what I can do is use where price has been before. It's been here before. Been here before. And it's been here before. Pivot points. It's been there before. So this is not complicated. This is not quantum physics. I don't need a degree in mathematics. Has the price ever been here before? We haven't even discussed fundamental analysis and true value. So I also want to know, if I'm going to flip a house, how much do houses sell for in this neighborhood? That's not complicated. If you wanted to go buy a car, you would Google how much do 2018 Challengers cost? And you'd go find a fair value and you would look around. But then it comes to stocks and people get stupid. I don't know. How much is a stock? But if it was a vacation, you would go to Priceline. You would go here. You would go to experts that can give you the price. It's no different in stocks. But some reason we get to stocks, people get confused. They can figure out what a house costs in the neighborhood, but they don't know the value of AT&T. It's the same thing, dude. It's called fucking Google. Like, you can get on and start researching, and you can very easily find there's people that went to college that have degrees in finance and all they do is study stocks. And they'll give you that information. You might have to pay a little subscription fee. You might have to sign up. But look, back to the 10 pillars. Take massive action. Right? Never stop learning. Focus your time and money. So I might want to focus some of my time and money to help me figure out these stocks, to catch the ones that are below value, that are breaking out, so that I know these targets are even logical. What if this company is not even worth $52? Then this target could be a complete waste of time. I'm not focusing my time and money, right? And so all of a sudden it becomes bigger than maybe what people were thinking. And so one of the questions I hate the most, that makes me want to reach through the phone and punch people, how do you value a stock? And it's like, dude, you wouldn't ask me that about a car. Nobody asked that question about a vacation trip. They just go to Priceline. They just go to Kelly Blue Book. Like, they don't need to be told that. They just go. But then it comes to stocks or investing, and all of a sudden everybody's dumb. Like, nobody knows how to do it. It's not complicated. It's the same thing as anything else in life, man. You know, what is the value of AT&T? Well, if we were going to write a check for the damn company, you think they'd give it to you for $29 a share? I don't think so. If you bought the whole thing, if you were Warren Buffett and you're going to buy the whole damn company, they're going to want about $34 to $37 a share. That's the cost. That's true value. Now, will it get there? I don't know. But if I buy it below that, it's cheap, right? And so now that could be a trade. I could buy an object that's paying me money to own it that's trading below true value. That's called what? A moat, right? And so you can buy things undervalued that could pay you money. And so as we begin to, as traders, you want to look at value. A lot of people insist they just want to trade charts. Okay, that's mental masturbation. You can just look at charts and think you're doing something. But if you don't know the actual value of the company, you're just looking at charts. You know, maybe you pull that off. I don't know. I don't know anybody on the Forbes 500 list or 400 list or whatever it goes, yep, made my billions looking at charts. Nobody. Nobody. There's not a single person on there. You've never met any rich person in your entire life who said, yep, made all my money looking at charts. You've never met a single human being on planet Earth that ever said that to you. Now, you've met them that said it about real estate. You've met them that owned a business. But you've never met anyone who goes, yep, I made all my money looking at head and shoulder patterns. Nobody does that. And yet people come in and spend an enormous amount of time on things like that, when all they got to do is realize that price does three things. It goes sideways, it moves up, and it goes sideways. This is just the reverse of that. It goes sideways, it goes up, or it goes down. Stage 1 and stage 3 is basically the same thing. The only difference between stage 1 and stage 3 is the direction it just came from. Meaning a stage 3 can become a stage 1. Let me show you. Look at Tesla. Sometimes when I show this pattern to people, they assume, oh, it's got to go down now. Nope. It could go stage, watch. We could have, what we say the breakout point is, price breaking above the 20-day moving average. And then it runs up, right? Well, look at all these breakouts above the 20. Now let's draw the, this is big picture. Sideways, up, sideways, up, sideways, up, sideways, up. And then what? Just now, we finally hit where all of a sudden we're sideways and we're possibly going into a stage 4. We've had a runaway. That's what's called a runaway. How do you trade a runaway? Well, that's what we talk about in the book, man. It's one of the things you got to figure out as you come through this thing trying to learn to trade is, how do you trade a runaway? Why would you sell it if it's going straight up? And so you have to have a way of entering a trade with the expectation that if this thing runs away, I have a plan for that. I want to exit on my target. I want to exit when the RSI is extreme. But then guess what? Now I want to be able to let it run. I don't want to be worried. I want to just let it run if it wants to run. And also need to get back in. Like, I want to be able to buy a breakout, right? And so Tesla's one is a runaway, but that's not the only one. It's the only one everyone seems to know about. But Square, look at this. So if we're looking at this, and this is my pattern, and this is the breakout above the 20, and as long as it's going up, I don't need to do anything. If I'm looking at the Square chart, it never went below the 20. It's been, 4 months? Nothing to do but just let it run. You don't even need to do anything. You may have taken profits once or twice. Why would I take profits at all? Because I'm a trader. I got to turn money. I need to get some money to buy another trade. I can't have everything in one trade, right? So yeah, I want to take some off, but then I just need to let it run if it wants to run. So I need to have a plan for that as well. A lot of times people get into a trade, they get in, they get 20, 30%, they close it out just to watch it go another 70%. And so you should have a plan. How do I catch and ride a runaway? So this all becomes part of your trading plan. So we need to, where does that come from? That comes from, I don't know, and I get asked this all the time. Hey, do you think this will break I don't know. How the fuck do I know if it's going to break resistance or how far it's going to go down? I don't know. I have no idea what these stages are going to do. It could go sideways for 5 months and then break out and run up for 4 months. Like, I have no clue. So remember, Uber's been one. I get asked all the time. I've been long Uber. Uber's going up. It's in a giant box. That gets a little more advanced. Right now we're doing big picture. But there's a concept in our trading where it goes into a box and the indicator is no longer of any value. And this is a big giant box. This is what AT&T's in right now. As long as it's trading inside this box, these indicators don't mean shit. Up, down, up, down, up. See? It was in a big box. You see how flat the 20 went? The moment these indicators go flat, they mean they're of no value to you. None. So now you got to find the box. And so you got to realize you're trading in a box. It doesn't matter if it's above the 20 or below the 20 unless it's breaking out of the box, which we did over here. Once we broke out, target what? $38. 36. Actually, we sold a little bit on Friday because the RSI hit 70. So that's back to these indicators. These help me fine tune this pattern. That's all they're doing. It's going up. It's in a stage 2 advance right now. Uber, right? Why? See, it's breaking out. Stage 2. How far is it going to go? maybe $10,000. I have no idea. I don't care. What I'm going to do is have predetermined targets where I take profits. And then what? Then I hope it just goes to the moon. So I'm going to scale out and I'm going to just let it ride. And I'm going to take the profits from it. And guess what? I might be stalking Exxon. I don't know. What am I looking for on Exxon? I'm looking for a stage one. I needed to put in a stage one. Stage one is not one day. It's not a single day. It has to put in days. It has to go sideways, right? And these indicators need to line up. Remember I talked about the RSI on the stage one and stage three's extreme? Look, extreme. It's at an extreme. Check. It has my attention now. Check. Remember the extreme? At the tops, has my attention now. Check. So when I see these extremes, see the extreme? Has my attention now. Check. But that doesn't mean it's going up yet, but it is the start of the possibility that it now is about to turn and go up. So if I want to trade from here to here, what's the plan? And that's what this gives me, the 4 stages of price movement. I put that stock over this, but before I go to this, I need to know, is the stock even worth? So my target, I always do the same thing. I showed you previous high. Is it even worth $44 before I even get into this? I don't want to buy a house to flip in a neighborhood that it won't flip, right? So now I got to go from outside of, well, it's Exxon. I need to go read on Exxon. What's going on? Why is this shit going down? You know, is there a problem with the company? And I need to go read and research and figure out. So now, now I got to start drawing my stage one, put my pivot point in. Is this a bottom? Well, today it is, but we need a solid bottom. We need 3-4 candles to even think this is a bottom. And even then we got to go light because we don't know. It's definitely not going up. So we got to go light if we're trying to trade it to the upside. And so just like we saw with ESPR, same game. As it goes down, I got to wait. I need it to go onto an extreme. I need it to start going sideways. I need to see some sort of bottom. Now, what makes this beautiful, and again, I'm gonna jump ahead here because this strategy, it gets deeper and deeper and deeper as we go down the rabbit hole. It's not just about a green line, red line. What about support? Do we have obvious support at levels that it's bounced off before? All of a sudden, support and resistance become real important. So price to the downside goes where it's been before. So the sell-off will stop usually where it was before. Price to the upside will stop where it was before. And because of that, you get this pattern of price moving sideways, running up, coming over, coming back down, stopping over here where it was before. And you'll see this where it just bounces around. Now, a lot of times, though, it's not flat or linear like you're seeing it. It's kind of at an angle. So if we were looking at a chart, it would kind of be like, it'd be more like this, like it'd be sideways and it would run up and then it would kind of come sideways. It'd start to come down and then it would go sideways and then it would blast through and we would take profits right here, right? And we'd let it run and then it'd start to go sideways, start to come down, and where would be our downside target? Previous low. And I wait and I wait, and then all of a sudden it starts going sideways. Now I'm interested. The RSI is extreme. I start buying. Oh, it breaks out. Where's my target? Previous high. And over time, stocks go from low to high. Remember we opened with the big picture? Dude, I just gave you $1 million. Most people are too stupid to understand what I just showed you. Now back that up to the SPY. That 71% of the time this game goes up. And intermediate times, stocks get blasted. And if you take what I just showed you, and you can see that pattern, this is on a monthly. Now we lay it on a weekly. Let's go to a weekly chart. And what I just showed you, now these are index funds. Obviously not individual stocks play their own game, okay? But let's go to a weekly. Look at this weekly drop. Look at this weekly drop. What if we had a way of deciding, hey, wait, that's the bottom? What if every time the bottom looked the same? Oh, right? Now we got something here. What is that called? It's called a trading plan. Like now you have a way to enter stocks, to take profits on stocks, to exit stocks, right? So you begin a plan. You can take these indicators and go, okay, cool, I could write this shit down. I could write this down and give it to a 9-year-old. Matter of fact, your 9-year-old, I could probably teach to trade better than you, because you're going to filter things. You're going to go, well, I was investing in this, but now I'm going to trade this, or I was trading this, but it got hit, so I'm not going to honor that stop. I'm a now invest in this. That's what people do. They'll go, well, I don't want to take that loss, or the market's going down, so I'm going to sell my winners and keep my losers, because that's how you build a great football team, by keeping your losers and selling your winners, right? You want to sell Tom Brady and keep Walgreens. Is that how we do it? No. But that's human nature. Like I have this problem too. That's why I'm talking from experience. Like we have to fight our human nature. Our human nature sometimes is to do the opposite. Now, some of us, you might be born with the distinct advantage, like you just have it in you. Like some people can just do things. They just have the ability to do math, or they're just good under pressure, or things just make sense to them. Like buying, like it just makes sense to you. And if you do, that's a distinct advantage. Understand, most people don't have that. And so when you start sharing that with people and they're looking at you, they don't have it. And so some of us have to learn it the hard way. Like some of us aren't born being able to play the guitar. It's hours and hours of practice, right? And so you practice the process of being a good trader. That's what the 10 pillars are about. Practicing the process of being a good trader. I spend 2 hours. I've been trading for 21 years, and I still spend 1 to 2 hours every day looking at charts. Where's gold? Every day. Every single day, the first thing I do in the morning is look, where is gold? Let's look at gold. It's at $1,947 an ounce. Guess what it was 10 years ago when I was looking? It was at $1,200, right, on the weekly. Where was gold when I first started trading? It was at way back here. And look what it does. It runs up. And it comes down, and look on this monthly chart. Doesn't that look a lot like my pattern of running up, going sideways, running down, going sideways, running up, going sideways, going up? Like, and so as you begin to look at all these things, where's oil? I mean, you even give a shit? You want to trade oil stocks, but you don't know where oil is. So if you're going to trade oil, you need to follow Brent crude every day. How much is a barrel of oil? We know where the Kardashians are. Right? So where's oil? And so as you begin to look at these things, we know where's bonds, TLT, right? We need to know the TLT. Did you know the TLT is breaking out right now? That means institutional money's getting nervous. Did you know that's what that means? When bonds go up, it means people smarter than me and you are getting nervous. Not traders, insurance companies, banks, mutual funds, institutional traders, people with billions of dollars are getting nervous. So they start moving assets into bonds. And all of a sudden, same pattern emerges. You get a stage 2 breakout. And you see, look, it moves just like the pattern. And now it's breaking out. Where's my target? Right here. But you'd have to care. You'd have to wake up and go, I wonder where bonds are, instead of saying, where's Tesla? Like Tesla's not trading. That's one stock of 9,000. That's not the entire stock market, man. Right? Tesla's come and go. When I first started trading, you know what Tesla was? It was BlackBerry. Called it the Crackberry, because it was the first phone that you could send text messages on. And that stock went from $1 to $10 bazillion. And it was the greatest company ever invented. And now it's worth nothing. They come and go, man. There's always those. But that's great. I'm not, you got to know how to trade them, though, right? If you're trading them. It's uninvestable to me. I don't know how you can invest in something that doesn't make money, but you can trade it, and you should trade it. So bonds, here's a way to trade bonds. Right now, I'm long bonds, right? I'm hedged because they're breaking out. Remember the pattern? If price is breaking above the 20, I want to be long that, right? That's what we did on ESPR. How did I know to buy that? It's breaking out. So that's the pattern. I don't know how far it'll go, but I know to go up, it has to do this. It's the only way to go up. To go up, it has to cross this green line on every stock of every chart in the world. It has to do that. And so if I see it doing that, there's my clue. There's your sign. Same on bonds. It wasn't aggressive, but it's trying to break out. Right here. Target $46 on bonds. So we want it, I call it the four horsemen of the financial apocalypse. You want to know where is the S&P. That's the overall market. In the newsletter, I call it the wind. Why? Because the wind is blowing. Stocks can go up if the market goes down. Some stocks. You know, biotechs will do their own thing. Tesla will do its own thing. But if the general market starts to drop, most stocks start to come down. Why would you want to know that? Well, as a trader, you want to get ahead of this, right? You might want to hedge. You could go short. I wouldn't advise doing that until you've been trading for a minute. You might want to get long bonds. Bonds go up when the market comes down. So if we got bonds trying to break out, let's go look at the market. Remember, I said if price is below the green line, that's bearish. We're below the green line, folks. Market is turning down. I don't know how far it'll go down. It may go up tomorrow. But right now, it is going down. Everything is pointing down. All 6 indicators of my book are saying down. And I would assume it would go about to 320, right around in there. That's also from the book. Previous resistance becomes support. I know if you've ever bought a trading book, you've heard that. We're still a little ways off of that. It could come down a little bit more. And then the next target would be 307. And then, yeah, someone mentioned the dollar. The dollar is a good one too. So you could look at up. This is the US dollar. You don't need to go to Forex to look at the dollar. Dollar's been in a downtrend. Okay? If the dollar goes down, stocks go up. If the dollar goes up, stocks tend to go down and gold tends to go down. So there's an inverse correlation. Why? Because if the dollar's rallying, that makes stocks more expensive for people outside the US. If you're in Canada and the dollar rallies, it makes stocks more expensive, okay? If the dollar rallies, it makes gold more expensive. They have an inverse correlation. You can go read on all that. Not 100% of the time. Correlations can break, but as a general rule, they do. Yeah, I mean, to me, it's crazy the dollar's going up. We're printing the hell out of it and dollar's going up. So that's crazy, right? Like you would not think that would happen. But if you look at the dollar, we're sitting right at resistance. Sitting right at resistance. You know, do we break through that? We're above the 20. We'll see. It tried it over here and it didn't work. Tried it over here and it didn't work. I tend to think this is just a pullback and a downtrend. Like it probably is just going to keep going down here. But this is a zone of impact here, man. So if you look at gold, you're going to see the opposite. Gold is sitting on support. I mean, it's a little above it, but basically you can see the support on gold, right? Why is this happening? Because the dollar was trying to rally. The dollar was trying to rally. If the dollar rallies, gold will go down. Makes gold less valuable. Inverse correlation. If stocks rally, bonds tend to go down. Why? There's no need to own a bond if the stocks are going up. Right? So these, you know, and these correlations can break. These are just general rules. Back to the 10 pillars of success. See the big picture. And you just need to know, okay, what are the correlations working? Are they broken? If they break, why? Sometimes it's confusing information. You're getting both sides of an argument. You're getting a reason for gold to go up and you're getting a reason for the dollar to go up, which can get weird. It won't stay that way. If you remember a while back, I kept saying, this is weird. I got long bonds right here. Why? Because we broke out and we wrote it to where? Previous high. Why? That's the pattern. All the way up to the previous high. That's the pattern. Bonds broke out. I got long, target, previous high. RSI hits extreme. I start selling my bonds. What happens? We go into a stage 4 decline. Now what's happening? We're going sideways again. We're breaking out. Where's my target? Previous high. But what was weird about this is that the bonds went up and the S&P went up. That's not normal. That's not normal. And it finally broke correlation over here. Over here, it finally broke. So you had institutions worried, and at the same time, you had people on Robinhood buying the hell out of stocks like it was crazy. You usually don't have that. And we had gold going up. So we had gold going up, bonds going up, and the market going up, and oil going up. Usually don't have that correlation. Something had to break, and it was bonds. I mean, come on, man. How do you know to buy? You know how to buy? The biggest question I get asked inside of all of this, like this is trading, okay? Don't confuse this with investing. How do you use this knowledge to invest? I want to buy stage ones. So if I look at a stock and it's ripping higher, this is why when people kept asking me, should I buy Apple before the 4-for-1 split? I wanted to just start punching myself in the face. It was so stupid. No, you don't buy stocks after they've run straight up and they're sitting at all-time highs on an extended RSI like that. Everything my book says don't do that. Everything. The entire book is saying don't do that. That's when you take profits. That's the definition of when you take profits. You want to buy when other people are fearful, sell when other people are greedy. This is the greed thermometer. When that goes extreme, it means people are greedy and people were being silly. So 4 quarters is worth more than $1. Everybody bought that shit. Everybody wanted to get in on that. Everybody wanted in on that. Why? Because they didn't know what they were doing. So what you got to do is just accept. Why did I do that? FOMO, fear of missing out. It might go higher without me. And so I'm willing to suspend logic. I'm willing to suspend charts and history and fucking education just to buy it. And the moment you do that, you're no longer trading. You're doing something else. Because sometimes trading is being disciplined, saying, yeah, we're not going to do that. Now, you might take the 3-point shot. Maybe you win the game, but you might miss it. And if that's not the call, if that's not the game plan, and you're the player that takes the ball and shoots it, and that wasn't the plan, you didn't pass it like you were supposed to, even if you make that shot, was that the game plan? No. Lesson learned. Exactly. That's what I'm saying. And it's not to pick on anybody. You need to learn that lesson. What was the lesson? So you don't do it again. The reason I was saying don't buy it, because I've been doing this for 20 years, and I've seen that happen over and over and over. There is literally nothing new under the sun. The price that we're paying for Tesla right now is so stupid, it's hard to comprehend. You cannot explain to me how that company is worth $1,000 per dollar of profit. It's obscene. It's obscene. But people could buy it. Doesn't mean it can't go up. Stupid can last a long time. It can last a long time. Stupid can go down a long time. So I don't know. It could keep going. Doesn't mean I got to do it. Just because everyone else is stupid doesn't mean I got to be stupid, right? I could just stick to a plan. And so if something runs away, I'll tell you one that I'm in that's stupid is Square. This is trading at a ridiculous price. But I'm going to stay there. Why? Because shit, I wrote it all the way up. If everybody wants to keep being stupid, I'll just keep making money. I wouldn't pay this price. I'm not going to pay $400 grand to flip a condo for $420. I want to buy it for $180 when it blows out. But that may mean you miss some. Okay. I missed some. This is not the game I'm trying to play. So I can't play that game, man. So now the reason I say that is for me, value is super important. I'm trading value. I need to know the asset I'm trading has value. That's it. And if you can't value it, then you have no way of knowing. If you have no way of knowing, then you're just playing the greater fool theory that someone else will come along later and pay you more. That's just not a winning game, dude. It's not a winning game. So you got to watch the RSI. That's part of, it'll help you. Don't have to get out, but you don't buy when it's on an extreme. You let it pull back. In every situation, it'll pull back. It may keep going, but it'll pull back. Even in this little moves here, you'll get better chances to buy. When that thing gets extreme, you'll see it pull back, pull back, pull back. It's got to pull back, dude. Because people they take profits. Whenever you see, as we're looking at this pattern, right? And I'll be wrapping up here. So And this is just the basics, dude. Like, we've just touched a tiny, tiny, tiny bit of what I do and know, okay? Tiny, 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 tiny. It's a big ocean. When price gets away from this green line, like way out here, you're treading on dangerous water. It wants to come back to this 20. Look at it. Back, 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 back. So when you're looking at that, and price is way away from this 20, and the RSI is on extreme, these are dipshits buying right here. There's no other word for those people. You could say, well, maybe they're day trading. Yeah, you could have all that. I get it. There's momentum traders and day traders, and I'm just telling you what I call them. Because you look how far away you are from that green line. You will find almost no chart that doesn't come back to that green line. Here's one we did recently. So LCA, ripped higher, caught my attention. This goes to the green. Would I buy this here? No. That's the dipshit thermometer, right? You don't buy that. Look how far away we are from this green line. Look how far away we are. What happens? Price comes back. And a guy like me just watches. And it goes into a stage 4 decline. Looks a lot like my pattern here. All stocks do it, even Tesla. They'll come back. And when they do, you get ready. What are we waiting for? We're waiting for the breakout, stage 2 breakout, right? Same thing I'm waiting for right now in Exxon, stage 2 breakout. What happened right here? Stage 2 breakout, exactly what I was waiting on. So these dummies bought here. I'm not buying there. I need the RSI down here. Boom. Where's my target? Previous high. Why? It's already been there. That's not complicated. RSI is extreme again. What do I do now? I just hold my shares. Anybody buying up here it's ridiculous. It'll pull back. It's going to come all the way back down. Now, doesn't mean I'm necessarily going to sell, but I'm not buying a position up here. I'm going to let it come in, and then I'll add to my position. Like, that's just being smart, watching the charts and understanding how price moves. How does price move? It moves in 4 stages. Some charts are not going to do it perfect, and you may not see it. If you don't see it, avoid it. Don't force it. Look at Gilead. For a period of time over here, Gilead was not trading right. This is just nonsense. We can't trade this. It was too erratic. But look what's happened recently with Gilead. Giant stage 4 decline. One of the most bullish things you'll see, and this is getting off in the weeds, and we hadn't talked about this. It started putting in a bottom right here. And this would have qualified for a buy. But you know, if you follow me, these you buy tiny. Because we don't know that's the bottom. We don't know for a fact. You don't back up the truck on that. You wait till the breakout. And we drop down one more time. Happens a lot, right? It went to go down a third one, and you're like, damn. But now we're back in the box. That tells me this is the bottom. Tells me this is the bottom. I make that assumption, and all my indicators start turning to the upside. Where's my target? 70. You might can make a case for your targets right here. That's probably more reasonable. I always use the 200 too, and then 78. So I'll scale out a little bit. If I'm an investor, this is where you're a buyer. This is where you start buying as an investor. You want to buy in these little tranches when it goes into these little boxes. If you're an investor, you want to buy in these little boxes. Why? Because you're avoiding, you're using these down moves to your advantage. Let it come down and go into a box, do some buying. Let it come down, go into a box, do some buying. That's when you want to do it. So look at Intel. So if you're watching Intel, this is what people without a plan do. Oh, look, it's on sale. So they run in and start buying here. Don't do that. It's not done going down. Hasn't even put in a bottom. Wait till the box happens. See that box right there? That's where you start buying. Because we don't know. Shit, it may have kept going and just going and going and going and going. And so, is it a big deal? No, this is a blue cap stock. If you bought that, it's not the end of the world. But if you start doing what I'm showing, you're going to buy systematically the same every time, waiting for that setup, man. And so what it's more about is system. If you ever play blackjack, it's really about playing consistent and not sometimes you hit, sometimes you don't, right? You've felt that if you've ever played the game. It's about playing it consistently. Winning Monopoly is about playing with a consistent plan and strategy, right? Uh, so yeah, we've been buying this. You can see it moving sideways. Tried to break out. Whole market got hit. It's still holding the original. That's getting a little. We'll get to that later. I don't want to put too much on here. I'm gonna confuse the hell out of you. This is an easy buy, man. Cisco did the same thing. Oh, my fat fingers. It would help if I could type. Cisco's done a second round down. So you see the sideways? I would have advocated buying that. And then we drop down again. I would wait a little. I would give this, you need a little more sideways. We need to see this over here. And then you're going to see like Gilead did. It's going to break out. It's going to go back up in here. And then eventually it'll work its way to $43. Thanks, Mel. So look, most of that, you watch my stuff for free, you'll get it. If you get my book, it'll help you. Cool thing is, if you have the book, I'll answer any questions you have on it. If you don't buy the book, don't ask me questions. Save us both a lot of time, man. It takes a lot of time. I do like helping people who buy the book, though, because obviously that helps me too. But it'll make more sense too. Plus, then you'll ask me like real questions instead of saying, "Hey, do you think this is a good buy?" That's the dumbest question. That's not the question. Instead of saying, "Is this a good buy?" you should say, "How do I know if this is a good buy?" That's a good question. Not, "Is this a good buy?" Because I'm going to look at it inside of the lens of this. And up here, I might tell you it's a done stock. Down here, I might tell you it's a great stock. Depends. I don't know. Are you trading, investing? It depends, right? That changes the dynamic of when we're buying and selling. So, I hated Apple and Tesla up here. I absolutely hated it. If it comes down here, I absolutely love it. Same stock, just difference of what's the pattern, where we at? Stage 2 breakout, stage 3. Now we're going into a stage 4. I hate it right now. It needs to come in. If we break above this green line, I love it. See? So, but now if we're an investor, yeah, I like Apple. Who doesn't like Apple? It's gone straight up its whole life. It's all context, right? See the big picture, pillar number 7. But dude, look at on Apple, man. This is a great trading stock too, because the trades last forever. The one thing about the money flow and the strategy where we're looking for the breakouts, it's fractal. So you could go to a 1-hour chart. We're on a 1-hour chart, and you'll start to see the pattern. Not all stocks will do this, but a lot of them will. Sideways, up, sideways, down, sideways, right? Tried to break out, didn't do it. You got stopped out. Now we're coming down. RSI. A lot of this is fractal, man. You can take it that low. It's harder to trade on the lower time frames, obviously. The shorter your window, the harder it is to trade. The longer your window, the easier it is to trade. You can see the pattern on a monthly chart, on a 5-minute chart, you could do it. I like it on the SPY on a 1-hour chart, works pretty well if you're day trading. And you'll see the pattern. We had a little breakout. They tried and it just didn't hold, fell back down. But even on that, man, you'll see it. You'll see it. It'll go sideways, it'll run up, and then go sideways, and then it runs down, and we're going sideways. Just the smaller the time frame, the harder it gets, the much harder it gets. But if you're looking at these time frames, look how it respects this RSI, the tops, the bottoms. Same stuff, man. The daily is the easiest time frame to trade from. It's just easier, in my opinion. Just easier. All right, guys. We'll wrap it up there. I'm not saving these for a while. That's the cover of the book, but this is a new book that I'm working on. It's the same shit. Don't ask me when it's going to be ready. I have no idea. It takes me a while to write. Anybody in the Money Flow Trading Society, though, I'm going to give you that when it comes out free. So just rewording of things, because I've been asked so many, like when I originally wrote it like 5 years ago, and it was, I wasn't anticipating interacting with people. So as I've interacted, it's helped me think of like, wow, I could have worded this better or that better. I could have said this or that. And, uh, Tony said he recorded it. Yeah, it's cool if you do. I just say, all right, guys, be good. I got to go work on a house. Yes, yes. Talk to you later. YouTube. Yes, sir, Glenn. Let's see. Got more on YouTube today. That's kind of cool. It's usually around 30, man. Yeah, a lot of weird correlations. We were talking about that. Sorry about the zoom in, man. Sometimes I forget I'm even on YouTube because I've done it for so long just on Instagram. I'm still trying to remember that I'm even on YouTube, so I apologize for that. And it sucks. I'm sure if you've done much camera work with the one sideway, I need to get a regular camera for the YouTube one. And the phone works fine on Instagram, but a regular camera would work better, like a Canon 10 or whatever for doing YouTube. It would probably make it a lot better. I've been wanting to do a trade room where we go live every day, market open, and look at 4 stocks, and then, but again, there's obviously, you don't want to get too fancy. It's not like there's a lot of money in this. There's very little money. Yeah, I can see why people might like the YouTube. I just honestly haven't put a lot of effort because there's just not a lot of people. But if more and more people do it, then I definitely will. But I understand that, man. It's easier to save to YouTube too. Good question. What newsletters do I subscribe to? I'll tell you what I subscribe to, and you don't have to do all of this, but this is just what I do, man. You just got to. Oh, and the PayPal. Yeah, if you want the ebook, it's $39. If you want the physical, just put in $60. So it's pretty laid back. It's no click funnels. I'm not trying to run anybody through some upsell. There's no upsell in there. You're going to get it manually from me. So you just put in if you want the ebook or if you want the physical. If you do the physical, I send you the ebook too. Just put in what you want. If you do the physical, make sure you give me your shipping address in the notes. Sometimes people's actual address doesn't match up to their PayPal account. I subscribe to Barron's. Just general stock reading. Barron's is cool because it's not very political. Okay, Wall Street Journal's cool. Wall Street Journal can get a little political. To be honest, I subscribe to the Wall Street Journal. I don't look at it as much. It does have some cool articles on the weekends. I also subscribe to Investors Business Daily. You don't need to subscribe to that one. Mostly to keep up with momentum type stocks. I subscribe to Morningstar. It's $200 a year. I like their stock analysis. They're not always right. I subscribe to Tip Ranks. It's probably a ridiculous amount of shit here. The Tip Rank ones, I don't do the full service $300 a year. They have a $300 a year deal. I do a couple of their apps on my phone. Yeah, Ben, if you want the physical, it's $60. If you're investing or trading a lot, information can't hurt you. So you got to kind of pick your value. I like Barron's again because it's just stocks, and I like Morningstar. If I had to narrow it down, I'd do those two. Tip Ranks is kind of cool for it. I just use it for see what the analysts. They have it where you can put a ticker in. It'll tell you what the top 1,000 or top 500 or whatever it is, top 100 analysts in America think, and about a particular stock. So that kind of helps me. If a stock has a lot of analysts who like it, and all of those analysts are 1-star analysts, I don't get as excited as a 5-star analyst, or 5 stars the highest they go. And then I subscribe to Morningstar's dividend newsletter. I may be dropping that. I don't really dig it as much as I used to. There's a new guy running it, and it's just kind of, I don't know. But that's all my subscriptions. Probably too many. I used to subscribe to The Street. Just too much shit on that platform, man. It's just too much. They were just constantly trying to get you to upgrade. Constant. So that's it. You guys be good, man. Yeah, the only problem I've thought of that going in and out with with the computer monitor instead of the phone is in the Instagram one gets out of whack, and most of the people are watching on Instagram. It might not though. I should play with that, man. I'm definitely not an expert on all that shit, so I probably should spend a little more time. So, all right, guys, be good. Thanks for watching.